Heya Cryptozens, welcome back to the Crypto Overnighter. My name is Nikodemus and we do crypto news analysis nightly at 10 p.m. And keep in mind, none of this should be considered financial advice. And welcome to Saturday, February 11th, 2023. Halfway through your weekend. Use it wisely. So, last couple of nights we've been talking about the Securities Exchange Commission. And for some reason, Gary Gensler is coming for crypto staking since around last December. That was when he warned everybody that he could see staking tokens as securities. And the SEC took aim at Kraken. As we talked about last night, the SEC hit Kraken with a $30 million fine, and Kraken can never again offer securities to U.S. customers. And they're automatically unstaking crypto for all U.S. holders. Also to suffer in the fallout of the SEC's war on staking is Coinbase, because Coinbase also has a staking program. And that may have spooked some investors because Coinbase shares are down 22%. Now, if you look on the chart, you can see it on Thursday and Friday when Coinbase started to get really hit with those losses. Shares closed at 57 cents a share on Friday. That's down 22% since Monday, according to NASDAQ. Because it was Thursday that the news came out about Kraken's settlement, specifically over their, quote, crypto asset staking as a service program, because Coinbase has a staking program as well. According to Coinbase Chief Legal Officer Paul Grewal, he said that the two services are, quote, fundamentally different than Kraken's. Then again, he also said that staking is not a security under the U.S. securities test. Fails the Howey's test too, he said. Quote, trying to superpose securities laws onto a process like staking doesn't help consumers at all, and instead imposes unnecessarily aggressive mandates that will prevent U.S. consumers from accessing basic crypto services and push users to offshore, unregulated platforms. Now, in his post, Grewal talks about the importance of getting this kind of regulation right. He warned of the damage to the U.S. crypto industry. His position, like others, has been that we need to keep crypto within the U.S. That, quote, aggressive mandates and trying to shoehorn securities laws onto staking will push businesses and capital overseas. And regarding his claims that staking fails the Howey test, he has a number of points. The first is that staking customers retain full ownership and control over their staked assets and can just unstake them at any time. That's different from handing someone a stack of cash. You still maintain control over it, and you can pull your stake anytime you want. It's also his take that the use of decentralized networks, that also separates staking on the internet from meeting the Common Enterprise Clause. He also said that because assets are staked on decentralized networks, and because transactions are settled through a community of users rather than a common enterprise, so that is why it fails the Howey test. And the rewards fail to meet the standard in his view, in part because the protocol, not Coinbase, determines who is rewarded and how much. He said, quote, these are IT services, not investment services. In previous financial filings, Coinbase has said staking revenue makes up a large part of their blockchain rewards. In the third quarter of last year, rewards were about $63 million. That's around 11% of their total net revenue. So it looks like staking is going to be a significant part of Coinbase's business to come. This is also useful because after the implosion of some yield farms like Celsius, staking is in demand, and this is a way for them to diversify their revenue stream away from just facilitating trades. That is, if the SEC doesn't kill it first. We shall see. Over the last year and a half or so, El Salvador and the International Monetary Fund, they've been going at it tooth and nail. In the latest salvo, IMF takes a look at the Central American country with some surprising results. Because the IMF, they saw a lot of problems coming for El Salvador over their adoption of Bitcoin. They saw a lot of risks. They said those risks, quote, have not materialized. But they're still being cautious. Quote, given the legal risks, fiscal fragility, and largely speculative nature of crypto markets, the authorities should reconsider their plans to expand government exposures to Bitcoin. Also of note, El Salvador made a $600 million bond payment last month. So Something is working for them, and I believe that to be a lot of tourism. And even in the face of the estimated 50% losses Nayib Bukele is facing on his country's Bitcoin investment. I say estimated because we don't know exactly. If you petition the government of El Salvador for more information, they'll tell you that that information is related to the government's trust fund, and that makes it, quote, reserved information. And while Bitcoin investments have not yet paid off, and while the IMF is still having grave concerns over El Salvador's health, even the IMF has to admit that El Salvador's economy has bounced back to pre-pandemic levels, although they do attribute that to El Salvador's handling of the public health crisis. Paxos is under investigation in the state of New York. Reportedly, the New York Department of Financial Services is looking into the stablecoin issuer. That said, a spokesperson for the department would not comment on the case, citing policy regarding open investigations. You see, Paxos has an application in for a full-on banking license. And the rumor is the Office of the Comptroller of the Currency has asked Paxos to withdraw their application. These are rumors that Paxos denies. As it stands, Paxos received a provisional bank charter in 2021. They also hold one of those rare New York BIT licenses. After the collapse of the Terra Luna system, the New York Department of Financial Services issued guidance. This guidance told issuers to be sure that their stablecoins are fully backed and that the funds backing those assets are completely separate from customer funds. Used to be you wouldn't have to say that. So now think about that. Given the Paxos pedigree, it already has a provisional bank license. They already have a BIT license. So it's going to be interesting to see what Paxos could possibly have done wrong. Now, caught up in all this is PayPal, because PayPal was working on their own stablecoin. Well, that's been put on hold, effectively the day after Paxos' investigation was announced. Now, this coin that PayPal was working on was due to be coming out soon, in a few weeks, but they were working with Paxos, so that's the problem. Because Paxos does provide white label stablecoin services, such as they provide for Binance USD. A PayPal spokesperson said, quote, "We are exploring a stablecoin. If and when we seek to move forward, we will of course work closely with relevant regulators." Now, this stablecoin was confirmed last year by PayPal. At the time, they said their stablecoin would be backed 1-to-1, so there's that. But I wonder if this is for some other reason, because this isn't their only foray into the world of crypto. In fact, they've got some fat wallets, sort of. As of December 31st last year, PayPal held $604 million in crypto. Now that's actually down. It was as high as $690 million last September. But since then, FTX happened. According to PayPal, 90% of that $604 million was divided between Bitcoin and Ethereum. Pretty even split. $291 million for Bitcoin, $250 million for Ethereum. The rest was split between Litecoin and Bitcoin Cash. Now, this comes after allowing customers to buy and sell crypto on the platform starting back in October of 2020. That said, we never really got the details on how much of each kind of coin it was holding. Well, that level of detail is now required by the SEC. Kazakhstan is looking to take a sizable bite out of illicit crypto mining. This new law was signed by Kazakh president on February 6th, and it reinstates the country's tough stance against unlawful crypto mining. So they've announced that they're working on new crypto regulations. They're aimed at reducing tax fraud and unlawful business operations. One of the pieces of legislation requires digital asset issuers to have the government's permission to operate in the country, which means they'll be subject to increased scrutiny under the country's counterterrorism financing laws. That piece of legislation goes into effect on April 1st. Now, the second piece is directed at illegal crypto mining operations. In an attempt to fight crypto fraud, the government is mandating at least 75% of the crypto that miners sell, it must be sold at a registered crypto exchange. Set to run a year, from January 24 to January 25, this law is collecting, quote, information on the income of digital miners and digital mining pools for tax purposes. As it stands, all crypto mining licenses in Kazakhstan are limited to 3 years, and there are differences based on whether you own your own mining facility or not. Shopify has launched a suite of blockchain commerce tools. These tools are designed to improve the user experience of their Web3-focused stores. This announcement came out on Twitter on February 9th. Shopify's blockchain team designer wrote, quote, "We've launched some fresh tools to help you build token gating apps for Shopify merchants. Specifically mentioned are things like expanded crypto wallet connect features and token gating API tools. Now, the API tools have been in early access beta mode since June of 2022. Now, previously, it was only open to a handful of registered sellers. Now, something called token gating. Shopify merchants can use that to control access to exclusive products, NFT drops, and benefits. As the tool evaluates the person's eligibility based on their connected wallet, that can be a handy way for shopkeepers to reward certain customers or to add exclusivity to specific products. This could also be great for merchants that do custom orders. When the order is made, you're sent the token, and then when the item is complete, it's just added to the store. The only way you can actually buy it is if you have the custom order token, but everybody else can still see it. So what's going on is Shopify has integrated the sign-in with Ethereum protocol that was set up by the Ethereum name service and the Ethereum Foundation. Now, the sign-in with Ethereum protocol is set up to allow the secure sign-in of Ethereum wallets without giving away private information to third parties. Christopher Waller is a member of the U.S. Federal Reserve Board of Governors, and he was speaking at a conference on February 10th about the crypto ecosystem. He broke it down into 3 parts: crypto assets, blockchain technology, and trading technology. Now, Waller talked about the potential applications of crypto technology, including distributed ledger technology and smart contracts. He compared crypto assets to a commodity, saying that they have no intrinsic value but can be traded due to, quote, social contrivance of money. However, Waller warned that crypto assets are risky and their value may drop to zero. He also noted that even institutional investors have lost money in the crypto winter. Waller believes that understanding the differences between the parts of the crypto ecosystem will help regulate it and reduce risks without stifling innovation. He has previously expressed skepticism about a U.S. central bank digital currency. FTX Digital Markets has released a report about the company's physical assets. The joint provisional liquidators found that FTX purchased 52 properties worth $255 million in the Bahamas. These properties included housing and office space for employees. The JPLs also found a fleet of vehicles, office furniture, and leased storage units. All told, these are worth about $2.9 million. The JPLs will dispose of these assets after getting approval from the Bahamas Supreme Court. Many FTX employees are no longer working in the company's office in the Bahamas. FTX CEO John J. Ray III said that the company is now operating in the metaverse. However, the JPL report showed that many employees had physically left the Bahamas after the company filed for bankruptcy. FTX filed for bankruptcy in the U.S. Bankruptcy Court for the District of Delaware. The judge authorized FTX debtors to issue subpoenas for Sam Bankman-Fried and his family. The Bahamas Supreme Court ordered that all FTX digital assets should be transferred to a wallet controlled by the Securities Commission of the Bahamas in November. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, please like, follow, and subscribe. Until then, we'll see you tomorrow night.